Hello, good evening, everyone. Welcome to our session. Today we'll be covering Pinbar strategy. It's me here with my friend Sam. Sam, you want to say something before we start?
Good evening, everyone. I hope you've been having it's just the start of the week, but already there's so much news. So I hope you'll have a very interesting trading week this week. And yeah, today we are covering the Pinbar strategy, and we'll get to go through it, see how we can use it, and then see how we can apply it along with other strategies in the market.
Okay, thanks, Sam. Actually, it reminded me that today we're waiting for the Federal Open Market Committee report coming up at 9. Yeah?
Yeah, it's in a few minutes, and already there's a lot of activity in the market as we speak.
Okay. All right, so let's go straight into what we are supposed to look at today. We want to look at the Pinbar strategy. It's something very simple, especially for traders who want to find a simple strategy to use in the market. This is one for you. So what is a Pinbar? A Pinbar is a candlestick that has got a very long wick on one side and a small head. And on the other side, of course, the wick is smaller. So on one side, the wick is very long. The other side, the wick is small, and then there's a small body as well. So looking at these two examples that you have on the screen, we have the candlestick at the middle, that's a Pinbar. Okay, and that one is a bearish Pinbar setup because it indicates likelihood of the price going downwards or a signal for a downward, a reversal to the downside. On the second case on the right that you're seeing on the screen, in a setup of like 3 candlesticks, you can see the one which is at the middle has got a long wick, a small body, and it's a bullish Pinbar reversal pattern. It's a signal for a likely upward move of the market. All these are reversal patterns. So it is a concept that you're going to apply where you want to get an entry at the beginning of a new trend. And this one is an indication of a likely change of the current trend. Yeah. So if you want to see this, if you want these setups to work properly, you need to look at them at key levels, which means you won't be waiting to see for a Pinbar only. Yeah. You need to also check whether is that Pinbar forming along a significant level. It can be at a support area, at a resistance area, along a trend line, or maybe even a Fibonacci retracement level, or even in a channel. So for it to give a high probability signal, it needs to be along an important or a key area in the market.
Yeah.
So I mean, how? Yeah.
So what it really shows is a reversal in momentum, and that is shown by 3 very key candles. The first one is the initial push towards the opposing direction. So if it's a bearish reversal, in this case we have a bullish push first. So this shows you one final attempt for buyers to try and sort of push it higher. And then from that, we have the middle candle, which shows you a rejection of the initial push. Yeah. So in this case, we had bullish momentum, but then here comes the bears rejecting this price level with that wick, because that wick is very important in this setup. It shows you how price was rejected from the previous, from the initial high, because this shows you that price had attempted to go higher, but then it was pushed back up. So the first 2 candles show you that bears are rejecting what bulls are showing you in the first setup. Yeah. And this is very important. Also, when you come to the second setup, the bearish momentum is what came initially, and then we have a rejection from the buyers. Yeah. And then from there, we have a continuation with the large bullish candle, which is in the second setup, it's a bullish candle. In the first setup, it's a bearish candle, which gives you a confirmation of indeed we might be having a reversal. All this, putting it into context, then you'd expect to spot this in key levels, be it support and resistance, or be it dynamic support and resistance in the case of a trend. Or even when it comes to news, we tend to see a lot of candlestick rejections and pin bars occurring.
Perfect, and thank you for that. Maybe mention a few things that traders need to check out for to have a high probability setup. 1 week has to be long, okay, showing, of course, rejection of the previous direction, and it is said that it's supposed to be at least 75% of the whole move, okay, and there are times when you have a scenario of sort of a pin bar forming, but it's not actually a pin bar, where half of the wick or half of the whole candlestick is a wick and half is a body. That one is not a perfect pin bar setup.
Yeah.
Okay. Yeah, you might want to wait for some more confirmation, or you want to look at a pattern of more than maybe 2-3 candlesticks to get a confirmation so that you can go ahead. Another scenario is where you might, you have something to add there, Sam?
I think you've put it nicely, because at the end of the day, it needs to be as clear as possible, because how else would you identify a major reversal without many contradictions? And that's where the pin bar strategy comes in. It needs to be a very clear, precise rejection candle for you to use to interpret or to say that indeed we might be having some rejection at this level, and prices might actually reverse. The momentum might actually reverse.
Yeah. So the structure of that pin bar, it needs to be really, you need to be very careful with it, because it can be deceptive. Another scenario is where you might have a long wick at the top and at the bottom, and then the body settles somewhere at the middle. That one is not a pin bar. It's sort of what do you call it? A doji, yeah, showing indecision. Yeah.
So there's one that shows indecision, and then there's one that shows rejection. Indecision means the market is not decided on the direction of the market is not decided on the direction. But then rejection shows the market is clearly ignoring one direction. Yeah. And which is why this three candle setup is important, yeah, because now the last candle shows you confirmation with which side the market has a bias for.
Yeah, confirmation is always important, even in the case of where you have a perfect pin bar, or like a pin bar with a good structure. You still need to wait for a confirmation for a high probability setup in the market. Yeah.
Yeah, generally, I think you'd use this setup with the confluence of other setups. So if you're approaching an area of support or resistance, then that's a good area to begin with. If there's a change in sentiment, if you're using sentiment to trade, then that's also a good confirmation. Or when there's a bit of news happening and the market is moving the market movement is volatile, then this is a good confirmation for that. So you do not trade this independently.
Okay. Can I also mention that you can use these pin bars with other market structures. For example, there are other reversal patterns like double tops, double bottoms, head shoulders. If you have at the double tops, at the two tops, if you have pin bars occurring there, then it helps build a strong case. Yeah.
Exactly. Yeah.
Sure. So moving on to a textbook example, you can see where we have that what do you call it? More like a fractal, set of fractal. That triangle, just to make matters simple. You have a pin bar there.
Coincide. Yeah, it does coincide with the concept of fractals a lot.
Yeah. So looking at that one, you can see a pin bar, and the next was a downward move in that price. And even looking at the beginning, there are a series of, there's an indecision candlestick forming, 2 indecision candlesticks, and then a pin bar. That's what led to that strong downward move that we have there. That is starting from the left, and then right at the middle, we have that setup for a bearish pin bar. So it's a downward. It's a signal for the downward movement.
Just a question, Matthew. Do we really have to have a perfect candles. In the case of the two left and right candles, they need to be perfect bullish and bearish, or bullish or bearish candles.
Sometimes they may not have to be perfect. That's why we explained the various scenarios where at the point where the market is reversing, if you don't have a classical setup or classical structure of a pin bar, then you might find it's a doji or indecision candlestick, or a half. You see, there are those 50% candlesticks where half is a pin bar, half is a body. Then what you should focus more on is the confirmation, the candlesticks that form later to give a confirmation, or the structure which forms after, or the pattern, not structure, the pattern which forms after the candlesticks which are formed. I think I've asked you there, right?
Okay, yeah.
Yeah, like in the case just at the beginning on the left, you can see we had after that bullish candlestick, strong bullish candlestick. Next we had an indecision candlestick. It's not a pin bar. In the second case, still an indecision candlestick, but more of inside, forming inside the first indecision candlestick. Then next we had a pin bar. And after the pin bar, there is a confirmation to the downside that could have formed a very good entry to the for a short position, and it materialized if you just look at it there. Yeah.
Yeah.
Yeah. Moving on next. Moving on to the next example. This is now a bullish setup for a pin bar. Look at the swing low on the left. Yeah. A perfect example now. So after the pin bar, then we have the second candlestick forming there. It's engulfing even the previous three bearish candlesticks which formed previously, and you can see how we had a strong rally to the upside, more like 1.5 times if you were to look, if you were to check out risk reward. Okay, that's what do you think about that, the setup, Sam?
The very first one, the very first setup on your left.
Yeah, that's it.
Yeah,
that's what I'm talking about.
Yeah, I think it's important more so interpreting what exactly it means, because I think one of the reasons you end up interpreting technical analysis well is once you're able to read exactly what the market is telling you. And most of the times price usually leaves a footprint of what has happened. So a trader's work is to interpret the footprint and know exactly what the mindset of the market was. And in this case, as price was coming down, we had one last push with the bearish candle. Yeah. And then an attempt to take the price lower was led with a rejection. So that shows you that the market is indeed rejecting lower levels. Yeah. And that's just half of the story. The other half comes with a confirmation from the bullish candle, which tells you indeed you're having a reversal.
Yeah. And traders have to do a little bit of filtering, or just wait and see how the confirmation candlesticks form as well. For example, look at the second scenario here, where we have several pin bars forming, but then they're forming on both sides, pin bar at the top, pin bar at the bottom. So how you'd want to look at this one, it is a level of indecision.
Exactly.
Because yeah, if you can add up those candlesticks, it's a scale, it's a trading scale as well. If you can add up those candlesticks, put them together, you realize it's like one big candlestick where you have a wick at the top and a wick at the bottom.
Yeah,
and
one big
a body at the middle. Yeah, one big doji.
Yeah, exactly, because we have buyers rejecting higher prices, sellers rejecting lower prices. So we have this equilibrium of some sort. And that's actually a price equilibrium if you think about it, because equilibrium is when price is settled and all the buyers are matching sellers and sellers are matching buyers. So in that case, we have to wait for either a break or something else to get out of that structure.
Yeah, there's something I would want to talk about, though might seem a little bit complex for now, but you might not want to. Okay, this is a little bit more advanced, but you actually do not need to see a pin by itself for you to see price rejection. Okay, sometimes you might have to add 2 candlesticks, and you realize it's more of a pin bar. Like looking at the top of that setup which you have on the example, more of a tweezer example, but you had a bullish candlestick to the upside, there's a wick, and then there's the bearish candlestick to the downside. That's when it's more of the price settled at the same level where it opened on the previous one, and that's where it has closed at the same. So it's more of a pin bar as well, but it's a little bit more advanced. You might want to practice on adding up, putting them together, and checking out the structure. Yeah.
I think it comes down to interpreting price, because once you're an adept technical analyst, then the time frames don't really matter, because now you're starting to read price for what it is. Yeah. And in this case, the price footprint is price was rejected from moving higher, and that's why even when you combine the 2 candles, you're still able to see the same thing.
Yeah. So now that you've said, there's something you've said, Sam, and I want to add that remember, you're not just trading because you've seen a pin bar. You're trading because you're getting information on how buyers and sellers are behaving in the market. Yeah. Exactly. So not just when you see a pin bar, which is a bullish pin bar, now you buy. No.
Exactly. The price has to tell you the story of what buyers or sellers are doing. And if you don't understand the story, then you're not going to be making any sense in the market.
Sure. So I think with that, then you can move to examples. That is what I had on the presentation. It's quite a simple strategy and setup. Sam, you have examples?
Yeah, I just have one. With the pin bar, it's one of my favorite when trading gold. Because gold usually is very chaotic, but it does provide good opportunities, and pin bar provides you with a perfect risk reward strategy. Because, you know, like for gold, for example, it tends to really move quite a lot. So if you're wrong, you lose a little bit, but if you're right, then it will trend for you for a couple hundred of pips or points. Yeah. And in that case, then it's one of my favorite strategies to use when it comes to gold. So let me just share that.
Sure. Give us something on the screen.
So it's not going to be picture perfect, because again, you have to be reading these things slightly more in depth. So you're going to be having to. Are you able to see my screen?
Just give it a second. I think, yeah, we can see it now.
Yeah. So for gold, it's one very nice pair that follows price action. So it's a good pair to start with. And it's never going to be picture perfect. Sometimes you're going to have setups that don't really look like the pin bar reversal. But then again, they're still good setups if you're able to look at the charts, study the charts quite more often, and then you're able to gauge on whether this is a good scenario for you to trade. In this case, we have the more obvious ones that are highlighted in green. We have the first case here, where price attempted to push higher. Yeah. And then there was some sort of rejection. Then you have to study how the candles were behaving during the pushback. Yeah. And then, so there was indecision at this point because there was really small candles. Then what happened was we had a pushback higher. So now we know this is generally this is an area of support or resistance. In this case, it's resistance. And then we had this a week up. So prices attempted to go higher, but then they were pushed back down. Yeah. And the confirmation came in with this candle over here. So in this case, you have the perfect risk reward entry. Yeah. In this case, if you are at all to go wrong, then the number of pips you're looking at to be wrong with is like this size. Let me change the color of this. Just a minute.
That was a perfect risk reward. That's a good risk reward.
Exactly. So we have that. if at all you are to go wrong, because your stop loss will be slightly above this pin bar, yeah? And if you're to be right on this trade, then you have, because you'll be taking the trade after the engulfing candle, this one, or the bearish candle. If you are to be right on the trade, you have this entire, let me insert a shape here. You have this entire till the previous area of support or resistance. So this entire area over here, put that as green, like that. So you see that the risk reward is very in your favor. In this case, this allows you to be wrong a couple of times before you get your next correct trade. Because a trade this size, this is actually about around 20, 30, 20, 21 pips. Yeah. With a very high risk reward ratio, it allows you to be very safe, to trade very safely, because one trade is going to cover your 2-3 previous losses. Yeah. So you sort of have that allowance to be flexible with the markets and find the most optimal entries. And again, we have this push downwards, we have this rejection over here. This is not picture perfect. There's no confirmation for you to go up. Yeah, but then again, you realize at the turn of every point along this support line and resistance line, there is some form of rejection. That's why I'm saying gold is one of the easiest pairs to identify pin bars, because rejection tends to occur a lot in gold, because it tends to seek areas of it tends to seek such level resistance and support, or order blocks, or however you might wish to call them. And this is one very good scenario. So we have another push downwards. We had this push over here. There were 2 rejection points before a bearish candle. So in this case, now you have to gauge as a trader what exactly it is that I'm looking for, or how am I deciding to interpret the market. Back to the same level we had, but slightly lower over here. And then we had a slight push downwards, rejection. Yeah. So this one is not so clear, but this one is. Most of the times it's going to be very straightforward if you have other confluences to guide you or to direct you when it comes to trading such setups. The other one is over here. I think I marked this was very clear. We had this push downwards. We had one final attempt to go lower, but then the market failed to close lower. Yeah. Why did it fail? Because we have buyers coming back up and pushing this market higher. Yeah, so sellers were unable to sell these prices, to sell this market at a lower level. Then we have this push higher, the classic pin bar setup, and then we had this slight push up. Yeah, one good thing with trading pin bars is you're able to define your risk and you're able to control your risk, because once the candle moves, say 1 R of what you're risking, you can quickly adjust this to break even, and then you wait and see how the market is going to play out. Yeah. So with gold, you have these setups occurring in most time frames, because it tends to move sharply, then reverse at very interesting times of the day, like the London Open, the New York Open, and such times, or when there's news. So it's a very interesting pair, Matthew.
Awesome. It's quite on point. I mean, when I look at your first example that you're given there, you see there is also a double top setup. Didn't speak about that, but it's there. Yeah.
Yeah.
You see it? Yeah, it's a double top setup. And again, on the next, after that move down, you realize the price was also testing the same level. And we had pin bars, and you see even the previous setups, the previous rejection candles can help you look for positions to the downside if the price obeys the same level. Yeah,
exactly. Yeah.
You look at those 1, 2, 3, 4 areas, even without seeing a pin bar, you realize there's resistance where price has gotten rejection previously. So very nice setup. I have got a few examples here that I can show if I can share. This is what we're looking at, I think. and we call it a session. If you have questions, bring them up.
Exactly.
And we will be here to check out. So in this case here, I'm looking at Euro Yen, and I've combined that Pinbar strategy with a Fibonacci retracement, okay, or a Fibonacci tool. So looking at this one, I'm let me just use a rectangle to show you what I'm talking about. So looking at that pin bar down there, it is occurring at a space at a point where we have 61.8, the price retracing at 61.8% off this upward moving this uptrend, this small uptrend here. Okay, 61.8, and then we have a pin bar and a good confirmation. Then there are some pips here that someone could have closed in. That's around 150 pips, and then 100, and then 150. It's a risk reward of 1 is to 1.5. Not bad. So you can combine the pin bar strategy with another key level that you can find even with a Fibonacci retracement. Yeah. So I'm looking at something else here. I wanted us to, all of us, identify. We have a resistance area at the top there. We've got how many touch points? 1, 2, 3. And on the third one, we had a pin bar. Again, I will highlight the pin bar with what can I use to highlight the pin bar? Let me use the same rectangle. There we have the pin bar occurring at that area, right? That's why you have the pin bar. Maybe let me use a line so we can easily identify that is the resistance. Okay, and then we have the pin bar occurring there, a strong downward move to the downside. Okay, so that is for Euro Yen. Next we have Australian Aussie Yen. Okay, there's a level here which is appearing as an uptrend, and all along at the beginning we had a pin bar there. It formed, and after this candlestick which formed next, a confirmation candlestick. Sorry, I'm trying to zoom in so that we can see. For the confirmation candlestick here, that could have been a good entry. And if we check out for the risk reward, of course someone could have entered around this area and stop loss at around 70 pips. Look at the run, almost 140, 130 came in.
Yeah.
One
just a question, Matthew.
Yes, please.
Does it matter whether the pin bar is bullish or bearish?
Yeah, it matters because it's what's going to give you the signal of the likely movement. Where are you having rejection? On what side are you having the rejection? Is it on the side of the bulls or the side of the bears? So here we're having a rejection on the side of the bears, okay, or rejection of the bearish move, right?
Yeah.
And then we have a push up.
So in this case, just a question: if the pin bar was red instead of blue, instead of green, will it still count?
Oh, I see why you're asking the question, because you have another pin bar here, right? So
just that one, the green one. Yeah.
I'm looking at the red candlestick here, and it's a pin bar as well. But then look at the confirmation.
Yeah.
The candlestick you're supposed to confirm did not. Instead, it reversed everything and went to the upside. And looking at how the price moved then thereafter, we had a confirmation. This pin bar here got a confirmation to the upside, right?
Yeah. With that, the bullish move.
Yeah.
Okay.
And then looking next along the trend, you realize we also had another pin bar forming alongside there, right? And a confirmation and a push to the upside. Maybe it gave a risk reward of 1:1. Not bad, but still it's not even been able to fall. It has not fallen below that trend line, so it's still a valid example. Yeah.
Wow, these ones are very interesting. Yeah.
Yeah, sometimes they're tricky to find out, but they can really be nice. So you can as well, we've looked at Fibonacci. Now let's check out on a channel or a trend. You can still find those setups along a channel or a downtrend. Look at the touch points where the price is hitting the downward or the lower support line of that channel. You can see pin bars and then I push the upside. And in some levels where it's not perfectly hitting the support of the channel, but look, we have a level here and we've got pin bars, and after that the price pushing up. Same case on the upper side. So
what you're saying, Matthew, is we shouldn't expect a picture perfect, a textbook perfect example.
I mean, you should traders should not expect on the actual setups on the charts to get picture perfect structures. They are always not the same. It can't be like it is in the book. You need to you are now applying. This is pure application, and with pure application now you're dealing with the actual market. You need to that's why we're saying that you need to read into the price movements other than what is really on the pictures or on the books.
And then another question that I might direct to you is, do we need to have an initial trend that was a downtrend or a downwards push? Because if you look at where you're highlighting right now, the previous pin bar that happened at the middle of the, that one, we had a very small downtrend, a very small push downwards before it continuing up. So do we need a large bearish movement, large bearish movement in candles or in the market for you to conclude that this is a reversal, or even the slightest move can constitute of a pin bar?
That's a good question, but I get why you're asking it. Because when you look at the middle, it's still a pin bar. Yeah,
exactly.
It's still a pin bar. But then that's why we're saying you need to look, the pin bar need to occur at a key level or along a pattern which is significant. That's what I began by saying when we were looking at the picture examples. So
exactly,
there are levels that you will find a pin bar, but you won't do anything. So for instance, let me highlight this. You have this pin bar forming here. That's a pin bar, but I mean, it's not forming around any significant area, because in this case now we are using a channel, right? So it is always good to identify a pattern like a channel or a resistance area or something that is going to help you understand the pattern first. Check out the pattern and then look at where the price is reversing or changing direction. Because in a channel, for instance, what a trader is looking out for is the price oscillating in between those levels. Now, at the point where the price is getting the resistance or reversing at, that's where we are using the pin bars to strengthen our case on where we're going to enter the market. Okay,
that makes sense. Yeah,
I hope it's getting clearer for the listeners and the viewers. Yeah, so you can check out. So bottom line is make sure you can find a pattern or a key level, and then at the point where you're expecting the price to reverse at, wait for a setup like a pin bar and then a confirmation, and it's likely to give you good entries. This one gave us some very nice examples, and I'm highlighting them with that rectangle. Check out there, good pin bars, and even here is a setup which is happening here. This is card Swiss, it's a pin bar there, and hopefully, I'm not calling out any signal, but hopefully, if this price keeps following this channel up and down, then this might be entry to the downside.
Potentially a high probability setup in this case, but well, then again, you need to have your own analysis before you confirm this.
Yeah. I'm not calling out any trade, but this is an example where you can, if for example, you're going for this setup here, then it seems like we have a pin bar here, and we can look, if you can look for some other setups that can help you confirm, then there was some support which was broken. Now it looks like it's retesting. So maybe someone could maybe, for instance, sell at that point and see whether you can have a stop loss up above there, and that is $30, for instance, if you used a 0.1, and based looking at the channel that we have, you might be expecting the price to run down all the way to the lower parts of the channel, and then my target around double 60. That would be an example of how you would enter trades using that setup there. Yeah.
So but again, there's clearly something that's informing you of the movement. But then the pin bar is the specific place where you place your trade, or where you have your entry point. Because at some point you can be right with the general direction of the market, but you don't know where to enter. And that's where the pin bar comes in. Is that what you're saying in this case?
Yeah. That's for CAD Swiss, Euro Pound as well. There was another setup still based on the channels. Seems the technical levels are very important, and let me highlight this one. I think examples are good for us, so we can.
Yeah, that's a very interesting one, because you have two pin bars instead of one.
Yeah, textbook example, right?
Yeah, so that's more than a confirmation, more than two confirmations to tell you that there is indeed a rejection for price to move. So if price is not going to go to the upside because it's being rejected, where else is it going to go? Yeah,
exactly. And that's it there. And then also need to know the importance of waiting for a confirmation, and then having the stop loss a little bit farther away from the wick, and so that if the price pushes again towards that point, it doesn't get you out before strongly falling to the downside according to your plan. Okay. The example USD card, you always find them, and I think up to that point, those examples are really good.
Yeah. We had very interesting movement with USD card from Monday. I think with the data that was coming out from Canada. So it was it formed really nice setups for someone to go to enter a few trades ever since Monday.
Yeah. I've not really followed closely on USD card, but yeah, you can also check out and find pin bars just along the key levels. So I don't know whether you have questions from the attendees, but maybe what we would want to mention is which are the best time frames that you can use those pin bars. I think it works on almost all time frames, but the higher the better, because you find a setup from a higher time frame, then the movement is likely to be you're likely to get a bigger movement if it pans out properly.
Yeah, that's true. Yeah.
All right, you have something more to add, Sam, or some more examples maybe, or something to add?
I think at the end of the day, with the pin bar strategy, every trader needs to have an arsenal of setups that they're looking for in the market. Otherwise, your setups will be far apart. Yeah. So a pin bar is the pin bar strategy is one of the best setups to look for in the markets, especially if you're looking for reversals. Most of the times when you're trading, you're actually trying to identify reversals, because reversals have the most, the best risk reward options out there.
Okay, sure. So then we can call it a session up to that point. Ladies and gentlemen, dear viewers, remember we are bringing these sessions to you to keep you mentored, to help you get more skills and master more tools that you can use in your trading, so that you can be better at the game. So keep following us on our socials. check out on our Facebook, check out on our Instagram, Twitter, and sometimes we also have various events in all these channels, like on Twitter Spaces, right? And keep learning, keep following. We have so many other strategies and market analysis videos which have been recorded on this YouTube. Take time to go and check them out and practice. You will be better. So I'm also on the social media channels. You can check out my Twitter handle at Mathew_Kabere, and Sam as well. You're on Twitter, right?
Yeah. Samson Zero. On Twitter, on Instagram, on Facebook. Yeah.
All right. So let's keep exchanging. Let's keep learning. And thank you so much for your time. See each other next time.